Hey everybody, Dave Bartosiak here with Zach's Live Trader, and we've got another edition of the good, the bad, and the ugly. That's where we go through and look at the trades from the previous week and cover where they are today and give you a strategy on how to exit them. Now remember guys, next week we've got a whole slew of earnings reports again, so we'll have one premium video, 2 videos I'm going to give away for free. Actually, I'm thinking I might even do 3 next week. I don't know. I'm feeling a little squirrely. There's a lot of earnings that are going to be coming up, so remember to send in your recommendations for which earnings reports you guys want to see. That's livetrader@zax.com. Make sure you send me those emails, livetrader@zax.com. Plus, if you have any questions about any positions you might have, I'm around to answer them. And remind me of any positions from before that you think might be of use to go ahead and review a little bit. Now, a little bit of housekeeping. Next week, I am going to do another one of these ahead of the October 21st expiration because we are going to have a ton of these that are expiring. So I want to make sure that we're going through and reviewing all of these just in case any of you guys are still hanging on to any of them. Now, let's go into this week and see what happened to some of the trades that we put on. Okay, now the first I want to talk about is the Wells Fargo bearish call spread that we put on. Now, Wells Fargo hasn't even reported yet, but yesterday they announced after the bell that their CEO had resigned. Huge rally in after hours, and everybody actually, I got a few emails from people saying, hey, has this Wells Fargo situation now changed the way you feel about Wells Fargo? No, I'm still bearish on Wells Fargo. So I put on the bear call spread. So we're talking about being short the October 21st 45.50, 46.50 call spread with a net credit of 41 cents. So the maximum profit on this trade occurs if Wells Fargo is below 45.50 at expiration next Friday. Now again, we're going to have earnings on this in the morning, on Friday in the morning. So tomorrow morning, if you're watching this on Thursday as I'm recording it. Now, this spread is already down to 22 cents because Wells Fargo sold off today. So that's great news. Already one day, big time in the money on this. And really what I recommend doing here is just sit back, relax, and just let this thing go ahead and expire worthless because you don't need to make the move, okay? If you go ahead and you cut out for the 22 cents or 22 cents that we've got here, you're going to have to pay, an additional commission to get out of the trade. What's the point of doing that? You can just kind of sit back, relax, and hopefully those 22 cents erode into nothing, and you basically just sit back and profit the full 41 cents of the trade. So that's definitely a good one so far. I'm hoping that you guys agreed with me being bearish on shares of Wells Fargo because that one is working out pretty well. Now, we've got another trade here. This is for Delta. The airline, I was also bearish on this. I put on a bear call spread. Now, Delta reported in the morning things were looking pretty grim, and then all of a sudden they caught a little bit of a rally. But I was short the October 21st $41 call spread for a net credit of 24 cents. So a much lower sort of net credit because this was a little bit out of the money at the time. Delta, last time I checked, was trading like $39.80, so it's still below that $40 mark, and that's going to be where our max profit is going to kick in, is if Delta can stay under $40. But because it did rally up close to 40, this spread has widened a little bit and gotten up to 36 cents. So I'm not really all that worried about it though, because again, we've got a week and a day on this one, and $40 is a nice psychological level for shares of Delta, and I believe that things are going to continue to the downside after we shake off the enthusiasm of that conference call. So I say you just wait it out because it rallied on that conference call this morning. But the actual dollar value of where the stock is trading means we're still in the money on this. So just as long as shares of Delta can stay below that $40 per share, I think it's going to work out. So this one isn't starting out fantastic, but I think it's going to be okay heading into the rest of the trade. Now, the last one was a very aggressive trade that I wanted to put on shares of CSX. That's the railroad company. Now, they rallied sharply, right? But this is the good part about going out to November expiration. We're going to look at this here. So we got a CSX bear put spread that we put on. So I was long the November 18th 31.28 put spread for a net debit of 87 cents. That means it cost me 87 cents to put a trade like this on, okay? So the max profit would occur with shares of CSX below $28 at expiration on November 28th. So that's a little ways off given that we are in the middle of October here, okay? October 13th, tomorrow's going to be October 14th. So you've got a month and 4 days essentially for this trade to go ahead and work itself out. Even though CSX has rallied in our face, the spread is still trading at 70 cents. So it's down 17 cents from where we bought it. So even though I was very aggressive, I rolled the dice on this, I'm not going to lose all that money, okay? So what I suggest is if you guys were aggressive enough to put this trade on with me, just take the hit, close it out relatively unscathed. If you can get 70 cents, if you can get 65 cents, if you can get 60 cents on this one, it's going to work out. And when you think of this in the grand scheme of things, guys, so you've got me putting on some of these smaller trades where we got some net credit. We made 20, 30% on one. We could potentially make 70% on the other one. And then if we roll the dice on something like the CSX trade, it doesn't have to necessarily go 100% in our direction. Even if it runs against us a little bit because I went far enough out, we had a little bit of a buffer, okay? It doesn't look like it's going to work out for us. We take a small loss. We live to trade another day. And let me tell you something. That small loss that we took is nothing in the grand scheme of the winners that we have on the table, especially the two that I just talked about earlier with the Delta and the Wells Fargo. I think both of those are going to end up working out despite Delta kind of running a little bit in our face, but still, we're definitely doing fantastic on that. So again, remember, whatever you want to see next week, the earnings reports that are coming out, I already know that we do have Netflix on Monday, but I won't be able to cover it, okay? Just can't do it. But we're talking some of the potential. We've got AMD's on the table, Intel's on the table, McDonald's, I believe, Amex, eBay, maybe PayPal. So there's a lot of options out there that we could be exploring next week. So make sure you shoot me those emails, livetrader@zacks.com. Let me know what you want to look at. And again, remember, next week I'm going to make sure you guys are armed to the teeth so that you can come in on Friday at expiration October 21st and you've got your game plan together. So I'm not going to leave you hanging, guys. Don't worry, I'll be right here. We're going to do another episode of the good, the bad, and the ugly and get it to you so you know exactly what to do. Okay, checking in with you from Zach's Live Trader. I'm Dave Bartosiak. I'll see you guys next week.